In today's video, we're talking about how to trade oil from a fundamental and technical perspective. If you're somebody who wants to get into trading oil, then this is the video for you because oil is a tricky market compared to other ones. It actually has some very unique traits, unlike other things like gold and indices and currencies. Oil has a really unique set of things that it looks at to really determine the price movements and future price projections. So let's jump in. So I've prepared a little bit of a presentation here for you guys on some of the things that I think are the most important factors to trading oil successfully. So let's jump into it. First of all, how to trade oil. The three focuses that I'm going to really dive into here today on this video are the fundamental and macro drivers. I'm going to also talk about the technical behaviors of oil, some tendencies that we typically see on the charts when it comes to oil price. And finally, a bit of strategy that I personally use to trade oil, which is something that I've traded for a while. So let's jump in. So let's start big with fundamentals. Fundamentals are, of course, things in the real world that are really driving prices. This could be anything from economic health globally. It could be global inflation levels. It could be geopolitical events like elections or wars or anything like that. Fundamentals is a pretty wide cast net, and I'm going to try and capture it in just a few minutes here on the video, so bear with me. Let's jump into fundamentals. So first of all, you need to understand oil is a commodity. And if you don't know what a commodity is, pretty much a commodity is any sort of material or raw thing that the humans need, right? So anything from corn to gasoline to oil to metals, copper, iron, whatever, right? Many different types of commodities. Oil is a commodity. It is a raw material that the world needs in order to function as it does. So when it comes to oil, trading it is a little bit different than trading a currency pair or trading the index world, right? It's different. So some things that you have to think about when it comes to commodities is it's all about supply and demand. How much is available versus how much do people need it? And supply and demand is this kind of back and forth relationship where when obviously there's tons of oil out there available for sale, the price is going to go down. And when there's a little bit of oil available and everybody needs it still, the price will go up. So really simple stuff there, but global growth, some things, let's talk about the demand side of that equation first, right? Of course, how much oil is in demand from people around the world. Well, demand side, we start with global growth. Global growth, of course, I'm talking about GDP and major economies around the world. Are they growing or are they shrinking? Because if economies around the world are for the most part strong and they're increasing, that they're growing, they're going to increase their demand for oil. It's just a natural thing. If the economies are doing very well, they're going to be building huge projects and exporting lots of things, and all of that requires oil. So oil is at the center of our modern economy. As much as people want to get away from it and get off fossil fuels, while that probably will happen gradually more and more over time, oil is still a very core component to our world in modern day. So in terms of recession though, if we reverse the script and we talk about recession in the global economy, that can majorly decline the demand for oil as less ships are moving around, less cars are moving around, less planes are flying. All of that leads to a lesser demand for the commodity. And in terms of supply, let's also now flip the script. We'll talk about supply for a moment. If oil producers, you got to think, where are people getting this oil? Well, there's a couple, it is something that is pulled out of the ground, obviously. So certain parts of the world have it and certain parts of the world do not have it. So one very obvious example is Saudi Arabia. They discovered oil and it's the black gold of the desert, and it has led to some very thriving, places there. Saudi Arabia, like I said, become an overnight success with its discovery of oil. And I think it was like over 100 years ago, and it's really become a prosperous, result. The point is, suppliers of oil have some real power in the global markets because, again, everybody needs oil and only certain places have it. Again, oil is there's very prominent in Saudi Arabia. Also, Russia is a major supplier of gasoline and oil to places like Europe, at least. That's been a little bit cut off recently due to the Russian invasion of Ukraine, which we'll talk about in this video a little bit. But suppliers are a big component because they obviously administer the amount of oil that is available on the global markets. And if oil producers increase their production, if they put out more into the marketplace, they have pretty much the power, the ability to actually cause oil prices to decline. And we flip the script. If they want to raise the price of oil, they can do the inverse. If they decrease production or decrease supply being let into the global marketplace, oil prices can substantially rise, which is actually happening at the time of making this video here in 2023. We're seeing Russia and Saudi Arabia kind of limit their exports of oil, which the oil market has been making a big move up. Actually, you can see it on my screen right here, and that's something we'll talk about in just a moment. Also, if global supply lines are interrupted, this is another thing. So obviously, if the major oil producers limit how much they put out in the world, that's one thing. But if supply lines are cut for other reasons, like in COVID-19, where a lot of people just weren't able to go to work for a little while, and we saw a major freeze up in the supply lines around the world, that can vastly increase the price of oil because suddenly everybody still needs it, but a lot less of it is easily and accessible to everyone. So supply lines are also something you really have to pay attention to if you're going to try and understand the macro drivers to oil. So some examples of when oil got really interesting were COVID-19, when again supply lines were majorly interrupted and there was a lot of fear around recessions, and so there was some really big strong forces on the oil market. Another thing is in 2022 Russia invaded Ukraine, and that made a ripple effect in the oil market big time because again there was all sorts of counterparties playing at this table, right? Because you had Russia invading Ukraine, and then many of the Western nations put sanctions on Russia, and that action, they prompted Russia to do all sorts of retaliation effects with the oil that they know everybody needs. So there's a lot of stuff there, and that can be a really major impact to the oil trade overall. Let's talk about geopolitics. So this is another thing. So I mentioned top oil exporters. Some of them can be listed here. So we've got Saudi Arabia, Russia, Canada, Iraq, Norway, and there are others like Kuwait and other places. The point is, there's also a League of Nations called OPEC, and this League of Nations has a strong committee that basically can make a major impact on the oil markets around the world, and they can coordinate together. Now, the major thing you have to understand about geopolitics is that if there are wars, if there are disgruntlements between countries, as there always are, sometimes the oil trade will very much pay close attention to what that has. Because again, people who have the oil, the exporters, have a lot of power. Now, here in the United States, we do make a lot of oil, but we also use a ton of oil. So we use a lot of our own supply. And so countries like Saudi Arabia and Russia, which export the excess that they have in large quantities, they have a large say on what happens in the oil market. Of course, to go back to that for just a second, geopolitically, the United States also has a massive military, and that massive military can also be involved in forcing their hand, right? So there's all these geopolitics at play, and that's why oil is a very fickle, it's a very interesting market to watch. Next up is speculation. This is another major driver of oil prices. Is the demand likely to be higher next year or lower next year? And people out there on the markets are speculating. If you're trying to trade, if you're trying to invest, obviously you are trying to some degree, speculate prices. And the point is, if the markets are expecting a decline in oil market in demand, prices can go ahead and decline right there. So it's almost like sentiment is really big. So speculation and sentiment in the markets can also be a major driver, because if people think that what the Fed is going to do next, right, that's another big one, Federal Reserve stuff, if that is likely to be a major mover in the oil market, people can kind of look ahead and try and forecast, and that can oftentimes lead to price spikes and plummets in the oil market as well. Same thing on the other side. If there's an expectation of a rise in oil demand, prices can go ahead and start rising. And interestingly, I mentioned it here, central banks and interest rates globally can greatly impact speculation, because if interest rates are rising, it may lead to a higher probability of recession. And so if interest rates are rising and there's more likely to be a recession, there may be possible lesser expectation for the demand of oil. So you can see how paying attention to central banks is at the core of markets everywhere, and oil is not left out of that picture. So now let's take a moment. We're going to jump over to the charts, and I'll show you some technical ideas or technical patterns that oftentimes are recognizable in the oil market as well. All right, guys, so we're taking a look at the oil chart price here. I've got US oil pulled up, and I'm actually in a trade on oil right now as we speak, which makes this an even better example run. I've got this trade on oil. You can see my P&L right below me from my brokerage, and I'm currently sitting in this trade. And I want to talk a little bit with a real example in front of us of how I personally will trade the oil markets. If we scroll out on this chart and we look at the longer term kind of view, this is a 4-hour chart, we're just kind of scrolling through. What you'll notice is that there are some really big explosive trends that occur in the oil markets. So for example, in 2022, around March, where we saw the Russia invasion of Ukraine, you can see we get these like ginormous kind of big, massive moves to the upside, followed by massive declines, so on and so forth. The point I'm trying to get at with the oil market in general is that it's a very trendy market. It trends really strong both up and down at different various times in kind of what's going on in the world. So during 2020, you can see there was a major increase as supply lines were interrupted. And so you can see if you were able to capture some of the drift of these fundamentals, the technicals go right in line. They are strong, continuous, impulsive trends that as a trader, you can really capitalize on. So for me personally, the way I generally approach this is a trend follower's dream. I really like trading oil. So for example, with this current modern example, I am long on oil. This thing has been trending very high. And even though, yes, it may look like, wow, this thing has already made a big move, why would you be long? Sometimes my best trades are when I trade in the direction of a massive move, look for pullbacks like this one that I caught here, and trail stops. So personally, my strategy, I guess, with trading oil is I'm looking for major catalysts, and I'm looking to ride trends, looking for healthy pullbacks where I can take a very small measured risk relative to that bigger potential reward that we often see that rewards oil traders for capturing big trends. So I really like oil's kind of price action. It's a very trendy market, and I love that aspect about oil in general. So finally, let's talk a little bit about strategy when it comes to the oil markets. So oil markets are driven by lots of different factors. So one thing that I'll show you in just a moment is the Edge Finder, which is our market software that helps figure out all these macro drivers in one place and helps to basically find confirmation biases in the market around the oil market or any other market that you'd like to trade that we have on the software. So I'll show you that in just a moment, but a couple things to think about. Focusing heavily on trend following. So when it comes to oil, I am usually somebody who is looking to go with the flow, go with momentum heavily. On top of that, I like to rent the space. I don't own the space. Oil has a finite time where it controls the whole world to some degree. And that window over time will likely close as more renewable energies will be implemented, and slowly oil will become less and less meaningful. So I don't necessarily want to invest heavily long term or buy the space. I'd rather rent the space, meaning I trade oil quite a bit up or down, and I don't necessarily like the idea of just super long-term investing in oil personally. Now, of course, there are people who have done very well investing long-term in oil, but again, it's just not my preferred area of investment. I personally like it from a trading perspective a lot more. And finally, when it comes to actually placing trades on the oil market, for me, what I'm mostly doing is I am mostly trading major moves and major event moves specifically. So for example, trading it during the COVID-19 outbreak or major wars that might start. Those can be really powerful factors to the oil price, and I like to trade those major catalysts. And finally, recession fears and things like that can sometimes create some wonderful opportunities in the oil market. So now I'll show you how I use the Edge Finder to find trading setups on oil and other markets, and we'll jump into that now. So going back to my oil example earlier and showcasing a little bit of the Edge Finder, I think we can take a look at some of the factors that I look for and kind of tie all together when it comes time to look for trading opportunities in oil specifically. So I'm looking at oil on the Edge Finder, and this is our top setups page. This page basically is an algorithm that takes into account lots of different data pieces and builds a bias on various assets and currency pairs. So USO, this is US oil. What you can see here is that across the top, there are several very important contributing factors that we pay attention to. Now, this is an automated software that takes a look at, for example, the commitment of traders data, which has a big impact on oil prices, retail sentiment, seasonal data, trend reading, GDP growth, right? How growing our economies, that's a major impactor to oil, inflation, unemployment, and interest rates. Now, currently, at the time of recording this video, we've seen a lot of economic expansion, which has increased the demand for oil. We also see supply limitations due to Saudi Arabia and Russia, as we've talked about in this video. And overall, you can see we're getting a +8 or a very bullish reading on the Edge Finder. So I use this as a kind of confirmation tool for the fundamentals when it comes to trading oil. So you can see I'm getting a very bullish reading here. If we take a look at COT data, what we're basically getting in terms of this, the algorithm's calculation here is we're seeing a lot of bullishness there on what smart money is doing. Retail sentiment, generally retail traders right now are short, which is giving us a bullish reading. If we take a look at seasonally, we see at the time of recording, this is September. September is historically a pretty positive month for oil in the last 10 years. Trend reading overall to the upside right now, as you saw. GDP growth, again, positive growth, generally going to be a bullish thing for oil. Inflation, red hot, and that can lead to some bullishness in oil. Unemployment, -1, and interest rates 0. So the algorithm basically takes into account all of this data for traders. If you're looking for fundamental or macro help, the Edge Finder is perfect for you. The point of the tool is essentially to help traders spot macro or fundamental ideas in the market without having to spend 4 hours a day reading articles. So if this is something that would be interesting to you, there will be copies available down below in the description. Click the links down there. You can chat with someone on our staff to get a copy yourself, or you can check out our website, a1trading.com/edgefinder. And this is our market scanning tool for traders looking to incorporate fundamentals into their trading. Also, I mentioned some stuff like the commitment of traders data. If you'd like to see a smart money video, we'll drop a link in the top right hand of the screen here now. That card will take you to where you can watch more details about this software, specifically the smart money tracker, which is a really popular key factor as well. Thanks guys for watching the video. If it was helpful to you in any way, shape, or form, hit that thumbs up button on your way out, subscribe if you're new, and we'll see you next time. If you're looking to improve as a trader, we've got some cool free resources here that I wanted to share as we close today's video. Down below in the description, there is a link to join our Discord channel or our Telegram channel. And we also have our website, a1trading.com, where traders can get access to free course material to help you improve as a trader. Remember, we are also live Monday through Friday on this channel around 9:30 a.m. US Eastern, broadcasting most live news events and that sort of thing. So hope to see you there. And also, we do have a couple videos here showing up on the screen. If either of these seems like it might be helpful to you, then make sure to click here or here, and we'll see you there.